Thanks very much, and thanks again for your attendance here today. It's been a great day so far, and lots of fantastic content. We've got a great panel here today to talk about the sort of impact of digital acceleration and some of the trends and so forth that we're seeing as far as that's concerned. I'd like to introduce them, but they'll then introduce themselves very quickly. So we've got Steve Bennett from Carne, who's an expert on due diligence and reg tech and how that brings to the market. Leah, who's the MD at IANUA, with an ecosystem for professional investors and especially family and private offices. We've got Dr. Zeynep Hizir from SS&C, who's again an expert in digital transformation and how that brings a different element to the wider market. And then we've got Henning Swaby, who's an MD, EMEA at Calastone, ex-asset servicing RBC for a number of years. So thanks very much, everyone, for joining us. Zeynep, do you want to just introduce yourself and the organisation?
Sure. Thank you so much for having us. And it's always nice to be the one after the coffee break. So I'm Zeynep, and I've been with SS&C for a year and a half. My specialization is on robotic process automation, and that's the area where I got my doctorate. But at that time, when I was doing my studies, we did not have the terminology digital transformation, which essentially is actually what I've done years of studying of, and I'm quite passionate about. To you?
Steve?
Steve Bennett joined Carne through acquisition about 6 months ago. Carne, I'm sure you all know Carne in this room. We are a very large independent manco provider, but also offering third-party solutions to the industry for own-cos in the industry and technology solutions as well.
Henning?
Thank you. Henning Swaby, head of EMEA. I've been with Calastone for 4.5 years now. As Henry said, I spent a long time at RBC on the asset servicing side, so I kind of know where the skeletons are buried. What we are trying to do, I guess the core of what Calastone does is message normalization. So we will learn the language of computer A for Bank A and translate that into Bank B. We're now the world's largest funds transaction network, processing over 10 million transactions per month, notional value of 2.5 trillion euros per year, 52 markets, 3,000 clients. We're a fintech, but we're no longer a startup. And what we're doing is we're taking that entire network and we're wrapping it around a DLT or a blockchain infrastructure that we call the distributed market infrastructure. And we're about to go to market, we're about to start monetizing it and bringing true benefits and value to the industry.
Leah?
My name is Leah Cox. I'm Managing Director and co-founder of IANUA Market Limited. IANUA is a global ecosystem for professional investors focusing on alternative investments. I've started the business about 5 years ago. We use smart matching algorithms, lots of data to be very targeted in what we show and syndicate for our professional investor clients.
And my name's Hamish Purdy. I'm Chief Executive of FE Fund Info. We've got some great customers in the room, and we provide data and software and services to the asset management distributor and then into the financial advice communities throughout the UK, Europe, and Asia. We service nearly 1,000 asset managers, private banks, and then multiple thousands of advice businesses around the world as well. So, on to the sort of topics of what we're going to talk about today. And the first one is really about the momentum that's being created, in part by the pandemic, of change within the asset management industry. And how much do we think that this is sustainable in terms of the pace of change and the rate of change? You know, at FE Fund Info, we think about this in terms of connectivity and the efficiency of that connectivity and the efficiency of the data change that go through. Zeynep, maybe if you kick us off just with your thoughts around how the industry itself can maintain this.
Thank you. First of all, I know our topic is pandemic positives, but I do also want to acknowledge that it was a very difficult time for everyone. But yes, if we have to, it's always good to have a positive story. And in terms of digital transformation, pandemic has actually accelerated the digital transformation. organizations had already begun their journey into digital transformation with looking into automation, and we were already talking about intelligent automation, and there was quite a hype. As you know, as human beings, we can think linearly, but exponentially is quite difficult, and there was a lot of resistance in digitally transformation. So while we had the foundations for digitally transforming, organizations were able to quickly adapt to it, and those who were not part of the journeys, they had to quickly get into that digital transformation. So that was, I think, one of the ways that it was impacted.
Yeah, and I think the area that you're an expert in, RPA, is a great example of
Yes.
People taking real steps forward to not just improve cost base, but also improve seriously the efficiency of the business. Yeah. Steve?
Yeah, I'd say actually the pandemic was positive for transformation. I mean, for a start, one of the things that did change is the ability to actually interact over video conferencing. That was actually a big change. So rather than having to travel and go to meetings that were cancelled and so on and so forth, we could actually accelerate the interaction with clients and potential clients. We have clients we've never met because we signed them up during the pandemic, so that was a positive. And I think the other thing that the pandemic actually enabled was gave people the space. Instead of being drowning in meetings, they actually had the space to think about what they needed and then started to execute on that. And I think that was a positive. In terms of sustainability, I think, or the sustaining the momentum, I think the challenge to that at the moment is probably several-fold. One is people are getting back into the normal way of doing things, so the time to think is less. And I think one of the challenges for businesses is to really think through what they need to do holistically. So we are often, as an industry, running from one regulatory problem to the next regulatory problem and saying, oh, we've got a project to deliver MiFID, we've got a project to deliver EET, we've got a project to deliver this. But actually, you need to be thinking more holistically, more long-term. Well, this is the direction of travel. What is it we need to do as a business in order to meet all of those needs in a holistic way? And I think that's a challenge for the industry, and it's the type of challenge that Carne is looking to help businesses with.
Okay. Yeah, I think the relationship issue is a big one, and with maintaining existing relationships was easier, but making new ones was harder. We even bought a couple of businesses we'd never actually physically seen before, actually one of them, which was a bit tricky, but it was good. The good thing is it does exist. I've since been there, so it's been okay. Henning, from your perspective and from the sort of Calastone experience?
Yeah, so the momentum has been there for quite some time now. I mean, we were created 14 years ago, and the initial purpose was to help markets that didn't have infrastructure. The UK is a platform distribution market instead of Europe, which is a bank-led distribution model. And so when you had platforms, then there wasn't any core infrastructure, there wasn't any agreements how it would work. And so we kind of started there, and we grew very rapidly. I think if we look at how the pandemic has kind of helped the momentum, it's been great. I think organizations have realized that the so-called smart sourcing model, where you could take advantage of lower cost centers in developing markets, didn't necessarily work as well when you had to send everyone home and they didn't have Wi-Fi or you didn't have laptops, or how could you cope? And I've got plenty of anecdotes which we might get into later on of people calling me up saying, "Oh, I need your help, please. Can you do this?" And we could. So the momentum is there. I think what's going to be the big challenge for the industry, and this is another one of those kind of buzzwords, but I think it's true, it's around legacy technology, legacy processes. You can't just switch off your electricity. You can't just change providers unless you, and if the upgrade means that you need to put in a whole bunch of new tech or sort out new processes or whatever it might be, you need to make sure that happens. And so the pace or the sustainability of the momentum is really going to be dependent upon how reliant you are on legacy technology, how brave you are in any moment of change. There are the early adopters, then there are the FOMOs who don't want to miss out, and then you have the deniers. And I think that once you get to the deniers section, actually they're going to realize that the momentum of change was much faster than they were expecting, and someone's eaten their lunch.
Yeah, I think we think also very strongly about the rise of APIs in that regard, and the ease at which we should be able to integrate systems. It's not always possible, but that's obviously a huge aspect in terms of the way technology change is happening. Leah, from your perspective and the sort of more the family office world, how's that, the sort of tech change happening in that space?
So we started the business getting on for 5 years ago, so pre-pandemic, and we're heavy tech, right? So we'd always started out with the idea of streamlining. The reason we started the business actually was complaints constantly all over the world from families initially around sourcing and originating, around due diligence, streamlining, wanting to syndicate and meet other families. So that was the kind of backbone of where we came from. And so we'd always started with the idea of having, data, lots and lots of data coming in its raw form, having the ability to then match that against what the families and the investors. We've actually kind of diversified beyond just families now. But we started out with private market deals and families, which we found were the hardest parts to try and streamline. And so, really, if anything, the pandemic just strengthened all of the plans and the ideas that we'd had originally. We'd always planned to scale the business, having partners all over the world. So, multifamilies, private banks, wealth managers, we have the ability to digitize them. So we can white label our technology and drag them 5 years into the future if they've done nothing in the space. And we've had a lot of proof that they're losing clients every day because they don't have the ability to offer them anymore the kind of 20% that they want, the kind of private market stuff, the less liquid stuff. So for us, this has just been a kind of continuation of the plans we had anyway. And in terms of sustainability, I mean, ours is only going to get more and more and more tech-driven. We're completely primed for automation, AI, machine learning, huge amounts of data that we carry in the background that we've built over the last 5 years. So for us, it's kind of just a continuation of what we've seen and actually being able to bring more and more partners around the world with local knowledge, local boots on the ground, giving them our tech, giving them, the kind of smart workflows and what have you that we've built. So long may that continue, if you ask me.
What do we think about the playing field itself and the sort of either the requirement for firms to invest in technology and or the agility that actually being a smaller firm can create? I know you already used the APIs phrase, but we believe very heavily in open architecture and we believe in open systems. And we believe in playing nicely in the sandpit with sometimes with competitors and partner firms and so forth. How do we think that technology challenge changes the landscape for either the size of firm and either the requirement to scale or the requirement to be more sort of specific in approach? Maybe Leah, we'll start with you and come backwards this time.
Yeah, no worries. I mean, as Henning said, right, legacy systems make it much, much harder for larger firms to be able to kind of start to enter the space, without a whole lot of work in the background to make those systems talk to each other, and obviously Henning can help with that. I find us as a smaller firm, and I mean, we're not quite a startup anymore, I guess, but we have the agility to be able to do a lot more, make decisions on the fly, go in different directions. We've pivoted a lot throughout the pandemic, just in terms of the way, maybe the order in which we're doing things. So I definitely think it's harder for larger firms to be able to start to step into the space of more automation and machine learning and things like this. But with firms like us around, obviously we're able to kind of help facilitate.
It's a good little information there at the end. That's good. Henning, from your perspective, from the sort of transaction processing world?
Yeah, so I mean, we look at the industry. So we're quite fortunate that we get to have everyone as a client. Whether it's the asset manager, the asset servicer, or the asset distributor, everyone is a client and a partner of ours. And so we look at what's happening in the industry, and we've seen consolidation across all three of those segments. There's been huge consolidation in the relatively short time that I was at Calastone. We've seen that there were originally 7, 8 really large European distributors. Now there are 3. Within the asset services, we've seen the State Street BBH announcement coming through. So we already had a behemoth and another uber large asset servicer. They're coming together. That sort of asset management is happening all the time. And so I think that when you're looking at the ability to stay relevant to your clients and to grow your business, and these are the discussions that we're having, is that increasingly it's either a question of scale or it's a question of expertise or agility and being able to have that white glove service. And sometimes organizations choose their service providers based on whether or not they want the scale and the access and they want the they want their superhighway, or sometimes people want to go a little bit more off-piste and they want to be able to do specific things and to have a better choice. Now, if you are yourself a very large organization and you go to a very large organization, you'll have a lot more tailoring than if you're a smaller organization. So I think it's going to be quite interesting what's going to happen now. And there are always new entrants coming in. There have been a couple of discussions on D2C and on looking to pivot from asset management to wealth management, or we've seen insurance to asset management, and everyone's trying to bleed into into each other's businesses now. So I think technology is going to be the key to being able to help the large organizations continue to scale, or the smaller organizations to be a lot more white glove, but at retaining costs relatively low.
Steve, your view?
I would echo all of that, actually, but with perhaps a slightly different take. So you have to look through, as an asset manager in particular, look through the distribution chain and look through the impact of what you're requiring of the parties you want to work with. So my background's in distributor due diligence, and therefore you're looking through the value chain and you're trying to get responses from distributors on behalf of big and small asset managers. And I think the challenge for the smaller players is that they have to be mindful of the cost of doing business through the value chain. So as more and more requirements are coming, particularly as a result of regulation, then the cost of doing business is going up. And we saw it through MiFID II. We saw that even before MiFID II went live, all the big distributors and all the big asset managers looked through their product providers and looked through their distributors and stripped out a whole swathe. And we see it now through our clients. A lot of them are looking through and saying, well, they're not providing that information, so we're going to cut them out. So what does that mean? That means that if you're a small player and you are not absolutely top of your game, you could find yourself squeezed out. So that doesn't sound like a very positive message. But there is a solution, and the solution is to join up and work with others and use the third party, such as Carne, to help actually standardize, simplify, and scale so that you're not providing that much of an overhead on those parties further down the line. And I think that's going to be critical for some of the smaller players to stay relevant, to stay independent, but the consolidation is going to continue, I think.
Makes sense.
I can just pick up right where you left off with the consolidation. Just to go back a little bit on RPA, there were 3 big players when RPA was the big hype. So there was Automation Anywhere, Blue Prism, and UiPath. This is back in 2016. So the company I work for, SS&C, we've just recently acquired Blue Prism, which adds to our already advanced technology. So it enables large firms such as SS&C to increase our efficiencies. So I think we do see a lot of this consolidation and large firms actually taking advantage of the agility of the smaller firms or the digital disruptors. And this is also one of the ways that digital transformation can be sustainable. And the other point I did want to make about this topic is the reason why we have these consolidations is also to allow for organizations to keep their focus on their core competencies and allow for firms such as SS&C to do the outsourcing for them and take on the risk so that leave the banks or asset managers to focus on their core competencies if they do not wish to allocate capabilities or resources into advancing or building these AI models themselves. So this is one way that I really like to look backwards, and it's really going back to total quality management or business process management before any of the automation existed. So it's kind of, you know how history repeats itself. There is a return to actually the basics, and this is a good way of looking at things. For organizations, what I would recommend, take a look at what are these new firms doing. If you're starting from scratch, how are they doing it? Then think about your customer journey. What is each touch point of your customer journey? And then see how you can automate it. And don't do between silos or business units, but analyze each touch point and then implement the intelligent automation. And that's really the way forward.
I think if I could just chip in there, actually, it's looking through the value chain. It's not just the customers, it's the supplier chain as well.
True.
I think that's where the complexity in distribution in particular is so many different layers, and it's got to work for everybody in the chain, and thinking it through logically from that point of view, and focusing on what you actually need. If it's commercially valuable, tailor it. If it's not commercially valuable, standardize it, and try and work with your peers. I think that's the key to success for smaller and medium-sized players in this market.
Yeah, and just to add on to that, yes, it is true, and it's not the speed, is it? So when we think about automation, we're thinking speed and 24 hours and non-stop, but that's not it. It's actually providing what the customer or supplier or you as a business need when you need it, not the fastest way.
Yeah, I echo what you say, Zeynep, in terms of the RPA. We use a lot of RPA within FE Fund Info, and actually we participate within that with our customers as well in terms of some of the services we provide. But I think it's incredibly important to make sure we understand the underlying process, as Steve said, in terms of re-architecting that and not just necessarily knitting together some of the legacy systems that have been around for a while. Next question's more about probably the way in which the distribution industry evolves and the way in which it potentially sort of looks over the fence at some other players or other industries that we're seeing in the wider economy. You know, we're seeing more pure digital, whether it be in the UK banking sector, whether it be frankly in some of the fund sectors in the UK and Europe. To what extent do we think that will be a driver of change over the next number of years, and to what extent should we be adopting that? Zeynep, maybe we'll start with you this time.
Thank you. Well, I'm going to approach it slightly differently because we've talked a lot about the technology and how technology is so important in digital transformation. But just also tying it back with the previous panel on diversity and inclusion, what I would say is what's important in keeping up with this is making sure that we are upskilling and reskilling the team in order for the movement to carry on and trickle down into each layer of the corporate culture. Because otherwise, just alone, the technology or the data or your data management systems will not do anything across any distribution channel. So what's important is to make sure that we have the teams that are operating well and cohesively beyond just the standard diversity, equity, and inclusion team. We should be upskilling and reskilling our workforce in how to lead with empathy, how to build teams that can work with the digital workers together, and how to sustain and maintain the corporate culture with this new hybrid environment.
Steve?
Well, I think I'm going to steal one of Zeynep's points from our pre-call. I mean, I think one of the key challenges here is technical capability in the C-suite. So I think it was you were mentioning. I think it was you was mentioning that it should be a standing agenda item on every board, every exec committee. So how are firms going to take that forward? And it's a factor of age, right? I'm in my 50s. I'm not entirely up to speed with all of the new technology that's coming out.
Speak for yourself, Steve.
You will be, of course, but I'm still an old fogey. So actually, it's how do you make that work, and how do you cross that barrier between the senior team and the technical experts? I think that's really key, actually. But what we can learn from the pure digital players, I'm going to say it again, they keep it simple, standardized, streamlined, simple.
Make it easy to buy.
Yeah.
That's the key differentiator, is that you don't need to then fiddle around and do all these other things. It's click, done.
Exactly. You go onto an Amazon website, you don't need to read a manual to know how to operate it. It's just completely intuitive. How many systems in the financial technology space that we interact with on a day-to-day work like that? Not many.
If I can just jump back into that C-suite comment, because I notice a lot of organizations, they will have it as an agenda item. Okay, let's talk about digital transformation, let's implement RPA. It's the big focus, big focus, big focus. And then something else happens and digital transformation falls behind the priority chain. And then it's, I compare it to a yo-yo dieting. Let's do it, let's stop, let's do it, let's stop. Monday, and then, oh, it doesn't work. RPA doesn't work. Digital, there is no ROI on this. So it is important that it's on every meeting, every agenda, every day.
No, I fully believe that. Henning, from your perspective?
So the question originally was around the evolution of the distribution industry, and I'm a big believer in looking at what happens in our personal lives, as, and then bringing that into our professional lives as well. And so, for example, what we saw in the pandemic is we saw all the restaurants were going under, but then a few of them started to realize, well, actually, I could start delivering myself, or I could use Deli, or whatever the food delivery services are to get access to people. Same with the wine shops. There was a lot of that going on in the pandemic. Not in my household, of course, but I look at exactly what Steve was just saying about, if you look at the asset management industry, and my background is asset servicing, so I'll talk specifically about that. But, some of this tech was written in the 1970s, 1980s. And it really is like logging onto your Commodore 64, from 40 years ago, and you have to know what the commands are, and then you have to press F4 and all this stuff. It's, it's not intuitive. It's not built for purpose. The other key challenge, or the key difference, is that we're about to undergo the largest transfer of wealth in the history of forever, pretty much, where we've had the baby boomers who come in and they've created their wealth and they've sat on that wealth, and they're going to be transferring that to the younger generations, and that's going to be thousands, hundreds of thousands, it might be billions, which are going to be transferred. And these people who are digital natives have grown up, and they don't want to have to, and they don't understand why I have to, okay, if I want to look after my money and continue to grow it, or even if I want to spend it, then I have to jump through all these hoops. It's just not, it's not a feasible thing. We the industry, are going to catch up, and we're going to start to increasingly apply things that we're used to in our personal lives, or expect things that we see in our personal lives to our professional lives. And I do also think that data is going to be a big part of that. I think if we're looking at the way that data is used, having access to real-time data to be able to make live decisions about things which are going on is going to be critical. Forget batch processes and having to wait until tomorrow or 3 days later, or whatever the batch processes that you're undergoing now. Combining data with AI, or with the latest technologies, to make better decisions around what you want to invest in, and also get feedback on what you have invested in. I think that's really going to change how distribution is going to work, both from a retail perspective. But remember that the institutional buyers are also real people and experience things in their real lives, and they don't want to have to put up with poor service and just because they're an institutional investor or a family office or you name it. So that's what
Leah, from your perspective?
Yeah, I mean, from our perspective, we always had to build the business and to build IANUA with every age group and every generation in mind. So we go from Gen Z to the matriarchs to the families. And we had to make it usable and user-friendly for all of them. So the matriarch doesn't know it exists, so there's no tech there. It's just very smart, and they get delivered all the things that they like and they want to see. And then we've gone WhatsApp, audio, video, lots and lots of kind of very digital things for the Gen Zs and the much younger generation. And you're very right, we're now dealing with the succession and all of this change, the changing, the wealth changing hands. And even what they're focused on, from an impact and sustainability perspective in terms of the investments they make. So all of these things had to be factored in, and it's not easy to try and make it so that it's completely ageless, if you will. And so there's something in there for everyone. So that was definitely something that we had to really consider, when we were building out the tech.
We think about it very much in the context of trying to help our customers eliminate friction. And helping our customers sort of understand their own cost. I know, Steve, you talked about this probably 15 minutes ago about the sort of cost of servicing. And a great stat is last year we had over 400,000 times that buyers of funds queried us over data points that we provided them. 400,000 times, it's an enormous number. And when you replay that back to our asset management customers and you say, this is someone trying to distribute your product and they're having problems with this. And by the way, here's how you're issuing your data into our infrastructure. Get that right. And then we can eliminate an enormous number of queries that we then push back into your teams and waste your resourcing. So, from that perspective, it's, I think, that real sort of cost focus in terms of how do we think about the sort of downstream cost of a data error, I think is absolutely crucial. I think it's a great segue into data, and Henning sort of nearly got us there, but you couldn't have a technology panel without talking about data. And it's when I first came to the UK from Australia, obviously in Australia data is data, and I remember being sort of going to recruitment consultants and thinking they couldn't even say the words right, which was a bit of a struggle. But what insights will we get? And Zeynep, maybe from your perspective to start with, what insights, I know we're very worried about intellectual property, we're very worried about GDPR, we're all very worried about sort of data use and data rights, but what do you think's coming in the next year or two in terms of the way the industry needs to think about this problem?
I think it's very interesting that even today, with all of the automation that's in existence, there will be a quarterly board report package prepared, and then it'll be so good, so well done, that next quarter or next month end, the teams will just take it and manually amend it, rather than relying on their data provider or the data that's coming, which makes it so that the front office cannot make accurate decisions, the board cannot make accurate decisions. So data capture, validation, and reporting is definitely key, and we are definitely not there yet in terms of the wider organizations in having the golden source or the good copy with the push of the button, getting the numbers that you want without having to wait for a batch. So obviously the focus on data will be paramount and key. And I do want to touch upon the cost of implementing these technologies, because I know what you're saying, especially maybe a decade ago, the cost of implementing technology was so high that it was cheaper to pay for the penalties of making manual errors. But those days are also behind us, because now we have to think about the reputational cost and the regulatory cost. So it's not just the financial cost that we have to take into account when we're looking for implementing technologies. Also, we want to think about how we're going to be in the future. So that's an important factor. And I do strongly recommend organizations to think about this, because oftentimes the technology vendors, we would have solutions to problems that you may not even realize are existing. Or somebody in the back office, because I was in the back office, then middle office, until now I'm in the front office, sometimes the senior managers will not realize that this back office person is doing macros on Excel spreadsheet, because reporting is getting done. So it's not even an issue. And that's why I was talking about really embedding it into each layer of the culture.
Yeah, couldn't agree more. Steve?
I'll approach it from a slightly different angle, and I'm leaving it Henning to talk about legacy systems. But I think we've got a challenge with data. There's so much of it. So you've only got to look at your email inbox, right? Hands up who manages to read all their emails in a day. Come on. Anybody? Nobody.
Read them, yes.
You do.
Action them, no.
So actually, even just on the email front, it's really hard to get through all of the data. If we look at the data that we're expected to collect from a regulatory standpoint, and bearing in mind, any regulators in the room? You're not going to like this. Bearing in mind the regulators don't work in the industry and they don't actually necessarily understand how the industry works. So there's a huge amount of information that's being suggested that we gather. I've got a warning for everybody. Be careful what you wish for. Be careful what you ask for, because if you're asking for it, you'd better use it. And I think the challenge is that there's some lack of clarity in what information is being asked for, and it's not necessarily being used. And the Central Bank of Ireland sent a shot across the bows in their Dear CEO letter in 2020 as an example about distributed due diligence. If you are going to rely on the policies and procedures of your delegates, you must have a process for reviewing them and evidencing that you've reviewed them. We note that many firms have not got evidence that this is in place. So if you're asking for it and you don't use it, you can expect a knock on the door and you can expect to be in trouble. So I think there's also a bit here about data to really think through what is it you're asking for, what is it for, and when you get it, use it. So ask for what you need and use what you get is my warning to everybody.
Thanks for
More positive
thanks
words.
for the warning, Steve. Henning.
So I agree with that too. For me, the question about data, or the thing to remember about data, is that you're only as strong as the weakest link in your chain. And so that means getting your in-house operations and process in order, because you've got one system that feeds into another system that feeds in, and so on. But then you've got your supply chain as well behind you and in front of you. You know, how can you make sure that you're then working together with the right internal systems and then with the right suppliers, that you can then get access to information which is actionable and which is useful to you? I think, you know, many organizations have gone through periods of trying to monetize their data, and not a lot of us have figured out how to do that, primarily because we haven't got all the data, right? And so if you have holes, then how can you monetize it successfully? But you know, in the absence of being able to have access to all the data, think about the data that you can control. How smoothly can you pass it around? Can you use it? And if you've got it, you know, if you're asking for things, can you use it, and how do you use it?
Leah?
I mean, we come from a slightly unfair advantage in that we've built everything fairly recently, and it's very fit for purpose. I mean, a lot of the information we take from our investor contacts is not so sensitive. You know, it changes and it can move and change, and we snap it every time they change it, so we have a bit of a landscape of what was happening when. We do build a huge amount of data in terms of the deal. We've got a huge deal bank that every deal we've ever looked at, you know, and this will be used for benchmarking and things in time. We have an enormous question bank that links in. Again, this is all to do with our automation and machine learning that's coming. And again, we've not been too quick to do any of that because, and thank God, because, you know, things change, and we've learned a lot during that period. So, yeah, I mean, we love data. We're hungry for data. Like I say, it's not hugely sensitive yet, but I do agree with you. If you haven't got the entire landscape, or you're not seeing the full picture, we've got some really interesting companies that are building data, and they see everything in certain markets, payments and different things. I mean, then it's hugely valuable. But yeah, for us, we love it. It's a great tool. But it's really an internal tool at this stage. So,
and I'm just going to to add another point as well, if that's okay. Just bring it back to our personal lives again. When I was a younger man, I had a great mentor, and he said to me, you know, you look up at these seniors, and you know, and you look up at them certainly when you're earlier in your career, and you think, wow, these people are geniuses. They're brilliant. They're the best. And he said, forget about that. They just have access to better data, right? Better data means better decisions.
Sure does. We've got over 200 million hits a year from our web traffic to our various web estates, so whether that be TrustNet in the UK or fundinfo.com here in Europe. And we have tens of thousands of people who use that for their portfolio construction and so forth. And the insight we get from that is just incredible. And, you know, starts to really does shine, you know, not just data or information, but we're getting some really interesting insight from it. How do we think about that digital investor experience? So the sort of, you know, we can buy things online very simply, but we can't buy a fund online very simply. You know, how do we think about that investor experience, and how does the industry need to evolve in order to continue to provide, you know, I think you said it before, Henning, you know, even though people are institutional investors, they're still people. They're requiring that sort of consumer experience in their business apps. How does SS&C think about that, Zeynep?
So I'm going to approach it in two different sections, this question. One of them is in terms of the organizations who have the legacy systems, and now that there is a search for higher yield, is mixing of different asset classes. So SS&C does have the ability to put everything into one platform, and I think that's essentially what you would want to do in terms of making better investment decisions. But in terms of the client experience or the human touch, you know, just before outside we were talking about the terminology phygital. We want the physical, the person, one-to-one touch, and the digital.
I think you should just make sure people get, because we only were introduced to this down the back, but I think I'm going to footnote you on this, so just give us a little bit more on phygital.
So it's if you want to buy a fund or if you want to book a taxi, yes, you do want to use your app. But if you've been in a car accident, you don't want to be talking, on an app. You want to be talking to somebody who can keep you calm and really understand your wants and needs. So we do need to strike a balance between digitalizing and digital transformation and keeping things human and one-to-one. So I think that comes back to we are all human than people who are, there. And that's how we can use intelligent automation for things that are that don't require human decision making and who don't require the value add of the human decision, where they can just automate it.
Okay. Steve?
I think it's a challenge, because if you're thinking about buying anything else, then it's a pretty straightforward process. But buying a fund is quite constrained by regulation. So you've got to jump through an awful lot of hoops just to meet the regulatory expectations. And therefore, I think Gen Z, is it Gen Z these days? Yeah. Gen Z is going to be quite disappointed with how quick they can get their money in the market, because there's a limit to how quick we can make it and remain compliant, I think. And that, I think, is a conversation perhaps that we need to have with regulators, because there's a big danger, and I'm sorry for pointing out dangers, but the bigger danger with investing is not getting the investment wrong. I think it's not investing. So if you're not investing, or you're not taking enough risk in the long term for your investment, you're not going to get the returns you expect. But how can you do that when there are roadblocks put in the way, well-meaning roadblocks, but not necessarily functional roadblocks to distribution? As somebody who invests in the markets myself, it makes it hard to access certain things. And maybe we need to think about what the end outcome is and start engaging with the regulators about what the end outcome needs to be, rather than the individual transaction level outcome.
Sorry to just jump in very quickly, in one of the previous sessions, the post-Brexit divergence session, Michael Collins was mentioning about protecting clients. What does it really mean? Yes, protecting against, some mistakes and errors, but what about their interests? We don't want to have like one investment channel that doesn't yield any returns. So yeah, it's very interesting.
Henny?
I'm going to give it a nutshell version because Steve has to catch a plane. So I'm going to. So for me, the digital investor experience gives you the ability to take control of your client experience, to be able to be involved in your client at scale. And the second thing that it does, through the scale, it allows you to grow your business efficiently, effectively, generating better returns for your clients and for your shareholders.
I mean, I would say we describe ourselves as high-tech, high-touch. You can never take away the relationship side. So we've digitized onboarding, MiFID classification, all of the stuff, signing NDAs online, all that stuff has been digitized. Even the streamlining. In fact, when we first started, we had investors asking us for a button that said invest. They just wanted to be able to straight through, which can all be done, we know. But we wanted to take it in stages. But we bring them all together in person, and more than ever now in person. So during the pandemic, it was virtually, but they want to meet each other. They want, when you bring a syndicate of like-minded investors together, they want to meet each other. So we've done as much as we can in terms of automation, digitization, making the whole process streamlined and easy. If they're looking at various different strategies, it's all the same. It looks all the same. But they want to be brought together. So high-tech, high-touch, I don't think you can get away from relationships and meeting people. As much as we want to make everything, digital and easy.
Exactly.
Yeah.
So just we're nearly out of time, but just what's the key priority from you guys from a technology perspective for the next 12 months? Maybe start with you, Leah, just in terms of what's the key either technology you're watching or technological change you want to implement in your business?
I mean, we have, for us, it's just more tech. We've always planned to make it as smart as possible. We're going to do a lot around our research side. So we have an in-house research team that does all the due diligence. We're going to make their lives much easier. So this is where all the questions and the system will start to react and start to fill in the blanks and stuff. So that's kind of the first step. We need to educate and bring our investors along with us. Okay. And as I say, you're dealing with lots and lots of different levels of understanding. So that would be me. Sorry, mindful of time.
Henny?
We are really looking to bring our blockchain technology, the distributed market infrastructure, to our clients, to our partners. We will be going live by the end of the month with our first client. We're introducing a module to help with B-share calculations in Taiwan, so CDC calculations in multiple markets. So we're bringing out modules initially that sit along existing processes, but we are having some very interesting discussions with asset servicers and asset managers around either replacing legacy technology or by introducing totally new share classes on a digital, on a DLT.
Got it. Steve?
So we're looking at bringing our experience of streamlining our own processes for the ManCo and bringing that to the market so OwnCos can use the same technology from a due diligence point of view all the way through the value chain of what a ManCo has to do. So that's what we're focusing on right now.
Bennett?
So for us, it's 1 + 1 = 3. So it's, again, to Leah's point, more technology. And so we are a technology-focused firm. We have a lot of investment there. And our technology recognizes handwriting with 98% accuracy, where the market is around the 80%. But if we combine the people with the maker checkers and the technology, we can achieve 100% of accuracy. So 1 + 1 = 3.
Fantastic. And very much for us, it's about open architecture. You know, we believe very much in an open system. We're re-engineering the back end of our systems to be very event-based, so people can integrate and be alerted when they need to be, when certain share classes change or certain events happen on the regulatory cycle. Well, huge thanks, everyone. Great panel, much appreciated. And I think that's it for us. Over to the next